Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two strong buy tech stocks. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Like I said, today we are talking about two stocks in the technology sector that both come in with a strong buy consensus from analysts. So we're going to take a quick look at what these companies do and how analysts are weighing in on the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well so you can stay up to date with all of our latest videos. Alright, let's get right into these two tech stocks. First up today is a company called AXON Enterprise. Their stock trades under the ticker AXON and is currently priced at $170.55 per share. They also score a 10 out of 10 rating on the TipRanks Smart Score with bullish blogger and news sentiment, increased hedge fund activity, and positive technicals. AXON Enterprise engages in the development, manufacturing, and sales of conducted electrical weapons for personal defense. Yes, we're talking about tasers. AXON is building the future envisioned by Star Trek creator Gene Roddenberry, where technology helps elevate humanity. Taser devices were directly inspired by Captain Kirk's phaser. They are a mission-driven company with the overarching goal to protect life. Their vision is a world where bullets are obsolete, where social conflict is dramatically reduced, and where everyone has access to a fair and effective justice system. The company has evolved over the years, starting off with their initial taser device, then adding in smart devices, and now for 2020 and beyond, they've included intelligence as well with their AXON Cloud. They're even working on an alternate reality VR empathy training delivered via their AXON Cloud for training police officers on how to better deal with mental health and special needs populations. They believe that by 2030, the taser will obsolete the bullet, AI will eliminate paperwork, cloud and IoT will transform communications, and AXON will help reimagine public safety. AXON just shared their Q3 earnings report earlier this week on November 15th. Their revenue came in at $232 million and grew 39% year over year. Their domestic revenue and international revenue grew 34% and 70% respectively year over year. Their earnings per share non-GAAP came in at $1.17 per share, far surpassing the street's estimates of just 26 cents per share. Their adjusted EBITDA grew 50% year over year to $51 million, and they ended the quarter with cash and cash equivalents of $548 million. We've seen several analysts reiterate their price targets following the latest earnings report, one of those being Jeremy Hamblin from Craig-Hallum. Hamblin wrote that demand for taser weapons has never been higher. We also heard from analyst Brian Gaswale from Raymond James. He stated that AXON remains uniquely positioned to provide technology that enables more effective policing, reduces lethality, and increases transparency and public trust. The demand for their ecosystem of products is, by our measure, stronger than ever. The AXON stock has 6 analyst ratings altogether and does come in as a strong buy based on 5 buy ratings and 1 hold. The average price target comes in at $231. That will be a growth potential of over 32% for this next year. And most of our price targets are actually within a fairly close range. On the low end, we do have a buy rating at a $220 price target, which would still be an upside of 26%. The high end comes in at $250 for upside of 43%. The second tech stock on our list today is PTC. Trading under the ticker PTC, they're currently priced at $117 per share. They score a 9 out of 10 on the TipRanks Smart Score with bullish blogger and news sentiment, increased hedge fund activity, and very positive TipRanks investor sentiment. PTC engages in the development of software-based product management and development solutions. Their unique portfolio of CAD, PLM, IoT, and AR technologies creates a closed loop between the digital and physical worlds to transform how everything around us is engineered, manufactured, and serviced. This digital thread enables continuity of data across departments and fosters collaboration across functions, empowering the people who are involved at every step. Now, CAD, or computer-aided design, is a way to digitally create 2D drawings and 3D models of real-world products before they're ever manufactured. Their advanced toolset enables users to expand deeper functionality, from generative design and additive manufacturing to simulation and analysis. PLM is their product lifecycle management, and their software enables geographically dispersed multidisciplinary teams to strategically collaborate with partners and customers using trusted, up-to-date product information. I'm sure many of you have heard of IoT, but the IIoT is the Industrial Internet of Things. And the Industrial Internet of Things connects your people, products, and processes to power digital transformation. Using industrial IoT platforms, companies connect, monitor, analyze, and act on data in new ways. And of course, their AR, or augmented reality, which is a highly visual, interactive method of presenting relevant digital information in the context of the physical environment, helping connect employees and improve business outcomes. PTC shared their recent quarterly earnings report on November 3rd. At the top line, they saw $1.47 billion, which was 16% growth. On the bottom line, we had $369 million in operating, which was up 58%, and $344 million in free cash flow, which was up 61%. Following that earnings report, one analyst that we heard from was Blair Abernethy from Rosenblatt. He commented on the company announcing a proactive restructuring plan aimed to drive a more rapid transition to software as a service, including a shifting of spending towards the SaaS initiatives and a reorganizing of operations to simplify both the field and product organizations. He said they're largely maintaining their fiscal year 2022 ARR and revenue forecasts while raising their price target. He is one of 10 analysts that currently have a rating on the stock, and it does come in as a strong buy based on 8 buy ratings and 2 holds. The average price target comes in at $158, which would be an upside potential of 35%. On the low end, we do have a hold rating at $140, which would still be an upside potential of 19%. On the high end, we have our most recent rating at $180, which would be a growth potential of 53%. So there we have 2 technology stocks, both with strong buy ratings from analysts and some pretty bullish double-digit upside potential. Now you guys know I always love hearing from you, so make sure to let me know your thoughts on these 2 companies in the comments down below. Were they on your radar already? Are these new names to you? And what do you think of their future growth potential? As always, please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.